Could we see USO be liquidated? Could this be the end of USO as we know it? RBC, the Royal Bank of Canada, is USO's only Futures Commission merchant, or FCM. They're the only ones who help USO buy and sell oil futures. And as we learned on May 21st in an SEC updated filing from USO, RBC said that they're no longer allowing USO to trade benchmark oil futures contracts. And if you know anything about USO, you know that's exactly what they trade. What is happening? What will happen? Why is it happening? What am I doing? And so much more in this video coming up. Say it with me now. Let's do it. What's going on, everybody? My name is Matthew. Welcome to my channel, and today we're talking about the potential demise of USO. Literally the day before this horrendous news about RBC came out, I posted this video explaining why I am long on USO. Stupid! I recently picked up a sizable position, so it only makes sense for the ETF to now start walking off a cliff. Comment down below if you relate to this feeling at all. But it's all good, we're still in the green, and we're going to talk about what I'm doing with my position later on in this video. But me buying in is old news. We're here to talk about what's happening right now. Is USO going to fall off the rails? I received this comment from you guys a lot on my last video. And because I read every single one and I try to reply to all of them, I wanted to reply to this one with a new video about the new news. What you guys say really does matter, so thank you for commenting. In this video, we're talking about what I've learned after reading several SEC filings, many news articles, calling up my boy Jay Powell, my guy Donald, and this is what we as a collective came up with. First, what was RBC's original deal with USO, to give us a little bit of background? Second, why RBC stopped letting USO trade oil futures? Third, what is next for USO? And fourth, what am I going to do with my holdings? As always on this channel, let's cut right to the chase with first, what was the original deal between RBC and USO? I wanted to cover this first so that we have a bit of background on their partnership, how it all works, and so we have a better understanding moving forward in this video. By now, I'll assume you already know how USO works, and if you don't, go watch this video right here, and if you don't want to do that, all you need to know for this video is that USO buys hella oil contracts.
You say the H word on my turf?
Hella.
Yo.
According to USO's prospectus with the SEC, and those are just big words I use to make me sound legit. Kidding, I actually read this. RBC agreed to be USO's Futures Commission Merchant, or FCM. In other words, USO buys and sells oil futures contracts through RBC. RBC Capital agreed to help USO because USO pays them commission on every trade they make. It's important to note that RBC is USO's only FCM, and yes, that was the most acronyms in any sentence ever. Now moving on to part 2 of this video, why did RBC make these changes? Why are they banning USO from trading oil futures contracts? USO released an SEC filing to update us on, quote, recent developments impacting the ability of USO to achieve its investment objective and strategy. Being an intellectual, I sat down and read all of it, every word. Well, I skimmed it, okay? Okay, I found the relevant parts and I read that. Happy? The link to the entire SEC filing that I'm about to start referencing will be down in the description below in case you want to read it for yourself, along with links to these wonderful books here on this here bookshelf here. I know a lot of you guys have been curious about some of the books over there, so I put my favorite ones or the best ones down in the description below. So for the SEC filing, we're going to be looking specifically at this part right here, which actually has 3 bullet points that tell us RBC is not the only reason why USO is being restricted right now. Let's take a look. Part 1 is in regards to the New York Mercantile Exchange, aka NYMEX, which is the name for the commodities futures market. They're able to place regulations on funds like USO, which trade oil futures. For example, the NYMEX can place regulations on position sizes for funds like USO. Case in point, the NYMEX told USO not to assume a position in the futures contract for June 2020 in excess of 15,000 long futures contracts. In other words, you can't buy more than 15,000 futures contracts for June 2020 because I said so. NYMEX kind of sounds like USO's mom or something. However, parts of the SEC filing that we're about to look at hint at maybe these regulations on position sizes only affect the contracts expiring in or before September, because it goes on to say that position limits imposed will remain in place and could involve additional oil futures contracts for later months. For example, those expiring after September of 2020. So this sounds to me like perhaps there are not yet regulations on position sizes for contracts after September 2020. This is perhaps, I'm not sure, but perhaps why USO has put 25% of their portfolio in December 2020 contracts. But guys, this might not even matter because of part 3, which we'll talk about after part 2, because it's just the way numbers work. 1, 2, 3, you know? Part 2 is just USO complaining about market conditions and unfavorable prices. But part 3 is the one you've all been hearing about, and it's also why these NYMEX month-to-month regulations we just talked about might not even matter for USO at all. Because RBC Capital, USO's only FCM, Futures Commission Merchant, is limiting USO and other market participants from investing in particular oil futures contracts. Most notably, the benchmark oil futures contracts, the ones that USO trades the most heavily. So why is RBC doing this and crushing the hopes of retail investors like you and me? Well, their internal risk management division said, hey look, this is a little too risky. Obviously someone over at RBC is not willing to risk it for the biscuit, let alone the brisket. Red flags for risk management across the entire sector went off when oil futures prices went negative for the first time in history just over a month ago now. It honestly makes sense why they would be more cautious and potentially limit or regulate people who trade oil futures. Can you really blame them? Yes, because I have 3 shares of USO in my Robinhood account. Okay, buddy, well I'm sure your Tesla and penny stocks are still doing great. Damn! The SEC filing continues to say... Sorry. The SEC filing continues to say that until further notice, USO may not hold positions in the benchmark futures oil futures contract. Why are you saying futures twice? It's already confusing enough. And that it may not purchase any other oil futures contracts for USO's portfolio through RBC. But don't worry guys, your faith is about to be restored. USO came and said that they cannot predict with any certainty whether or not RBC will lift these regulations, and they cannot predict with any certainty if or when they'll find another FCM to help them trade. I feel comforted already. USO made a statement saying that these regulations from the NYMEX, RBC, and other regulators have forced them to start investing in other oil futures contracts and also rebalance their portfolio much more frequently. Am I 2 years old? Much more frequently than before. On Borrowed Time shared some knowledge with us and pointed out that USO currently holds more in treasuries and cash than they do in oil futures contracts. Now this has to do with the regulations that we talked about before from NYMEX reducing the amount that they can hold in a position, but it also has to do with their rebalancing. And to me, them holding this much in treasury bills kind of looks like poop.
I don't even think they keep up with inflation.
But then again, I have to admit, I'm not super experienced in the treasury bills department, so if you know better than me and I'm saying absolute gibberish right now, please call me out. I'd love to learn some more. Let me know in the comments. Either way, treasury bills are not oil contracts, and that's what we want. That's what we need. So what can we draw from the... Oh, sorry guys. Yeah, dude, that's what I'm trying to... He says you should smash the like button because these videos take a long time to research, record, and edit. That's smart. He says I should guilt trip you by showing you how dense SEC filings are and the stuff I had to read through to get you this information. Alright bro, I'll see you on the Suez Max tanker party. Alright, peace. So what we can tell from this SEC filing so far is that the biggest damage that's already been done, that's sort of tangible I guess for lack of a better word, is that USO can only hold smaller positions in its portfolio. Obviously this is not ideal, but it doesn't mean we're doomed quite yet. Let's talk about what all these regulations from RBC and NYMEX means moving forward in part 3 of this video. What is next for USO? Now before I tell you what I plan to do with my position, let's weigh the different scenarios here. To be frank, nobody knows. On the bright side, the CEO of USCF, which is sort of like the parent for USO, said that USO is still trading and able to rebalance its portfolio. Hooray for not being dead in the water. Yet. But on the dark side, there's no way that's an expression. I swear the amount of expressions I make up on the spot in this channel is ridiculous. On the not so bright side, things can get very bad very soon. In the worst case scenario, USO is forced to liquidate all its holdings before the next roll period. Very sad. Another possibility, just a few ticks away from the most extreme worst case scenario, is that USO can hold on to what it has for now, sell it off as expirations come through, but it can't add to its current positions. In other words, as USO's contracts begin to expire, they sell them off and they just walk away with what they can get, but from here till when they expire, they can't buy anything else. Eventually, they'll end up selling all of the contracts they have and that's it. It's game over. But the best case scenario would be, of course, for USO to find a new FCM and continue trading as happily as before. We get those USO gains. Now it's time for part 4. What am I going to do with my position? Obviously, I have a position in USO and I plan to hold it for the long term. But this is what I said in my last video. I don't plan on selling anytime soon unless there's another fundamental shift in, say, their portfolio structure, or if there's a huge shift in macroeconomics. And this, what just happened, I think it counts as a fundamental change. This is like if you were a long investor for Netflix and they said, all our content creators, yeah, they kind of left the platform. We have no way of getting new content. And also, the amount of TV shows and movies that we can hold on our platform has been reduced. But on the bright side, we get to keep the rest. Potentially. It could all be gone by next month. Hopefully this analogy makes sense because obviously the content creators leaving is RBC saying no more trading. The reduced number of TV shows and movies is the reduced position size from the NYMEX. And of course, the fact that they might lose all their TV shows and movies is the fact that USO might have to liquidate all its positions by the next rollover period. So if you don't think that that is a fundamental change to Netflix, or you don't think that this is a fundamental change to USO, then I guess you can hate on me for it, but I think this qualifies as a fundamental change, and that's why I'll be reducing my position, but not completely closing it. And again, guys, as always, this is not financial advice. I'm by no means an expert. This is just all my personal opinion, as is everything on this channel. I really just make these videos to hopefully give you a launch pad to start your due diligence or maybe aid what you've already learned. I want to be cautious here and assume the worst case scenario, even though that might not be the most probable scenario. I still have some profit. I'm going to take a little bit off the table and reduce my risk. This is a similar thought process to how I played NAT, where I saw it had a very quick, unhealthy run-up, and I decided to take some profit. And even though I sold early, I assumed the worst case scenario that it would come crashing down. So I took some profit, reduced my risk, and brought my position to a size where I was comfortable holding it for the long term and having my money trapped in that position. So do I think that USO is going to have to liquidate all its assets by the next rollover? No. Do I want to risk it? Also no. Do I want to put myself in a better position with less risk and take a little bit of money off the table with some profit on the side? Yes. So again, I am not abandoning my position in USO. I'm still going to hold a little bit of it for the long term because a lot of this is still up in the air. But because it's up in the air, it's extremely dangerous because Wall Street hates uncertainty. Ironically, I'm going to be mitigating my risk and managing my risk just like RBC did when they told USO, can't trade anymore. So again, mitigating risk, holding the rest for the long term, hoping that we can go back to business as usual with USO. And as always, not a professional, just a person on the internet who you're watching. And yeah, if you found any value in this video at all, please make sure to hit that like button. I love making these videos for you guys, but they are very time consuming. So I just ask for 1 second of your time to scroll down or scroll up and just click that little thumbs up. So before we get into the quote of the day, make sure to subscribe, turn on those notifications, and follow me on Instagram if you want daily posts about mindset, motivation, stocks, investing, books, all that good stuff. And as always, we'll end with the quote of the day. Be like a flower, survive the rain, but use it to grow. If anyone knows the person behind this quote, please let me know in the comments below. That'd be awesome. But I chose this one because, you know, USO's kind of been a roller coaster for us. A lot of retail investors got in when oil was crashing and they got slammed because smart money and the big hedge funds were all shorting USO. because they knew that a lot of retail investors were getting in and they didn't know what they were buying. Then we had this crazy reverse split and restructuring of their portfolio, and the people who bought before, who didn't know what they were doing, I guess they got lucky, or maybe they did some research and decided to stay in, and other people did some research and decided to jump in after this positive restructuring. And now we might see a second leg down because of this news with RBC. So it's definitely been an emotional and intellectual roller coaster as we're trying to keep up with our emotions and the news and all this new information coming at us. There have definitely been some rainy days with this investment for a lot of people, requiring a lot of adaptability, quick learning, and all that good stuff. Hopefully you can apply it to future investments. Thank you so much for watching to this point in the video. It seriously means a lot to me. And if you haven't subscribed yet and you're still here, we'd love to have you as a part of this channel's little family of financial independence advocates. So as always, don't forget your peace and thank yous.